I want to talk a bit about inflation, Jim. Morgan Stanley today out with a note saying that these pressures for 2021 are not necessarily transient, especially in mobility-related sectors. And, of course, Powell got right to the point yesterday with that Wall Street Journal conference. Take a listen.
Businesses and people would need to believe that larger increases in prices would be repeated year after year. And we think it's unlikely that these deeply ingrained low inflation expectations would suddenly change. It is more likely that effects like the ones I described would be one-time effects.
Yeah. Morgan Stanley, Jim, says it's going to remain elevated through mid-year as inventories and supply chains remain challenged, which we talk about literally every day.
Well, Costco, Rich Galani, who's my favorite CFO of the retail group, has a list there in the Costco. He says, here, timing delays, port delays, they're impacting furniture, sporting goods, lawn and garden, even some food and sundries, seafood, imported cheeses and oils. And then there are pricing pressures in non-food, electronics, chip shortage names, TVs, there's pricing pressure, computers, pricing pressure, smart home related items, and then here's one, exercise equipment and bikes. Do you want to step, David, do you want to step in front of Peloton right now when you know that they're having supply problems to get bikes at Costco? Exercise equipment at Costco?
No, thank you.
That's right. No. 108 million strong?
Yeah.
And they want their, so what, buy a little Peloton here? What do you think? A little schnitzel?
No, thanks.
No?
No.
You're not going to take it on?
No, look at it, down 12%.
You don't think this is a level?
I don't know. Listen, I don't opine on this stuff. That's for you. So let's turn this around. Do I want to buy Peloton here, Jim?
It was facetious, David.
I know that, but I get uncomfortable just being asked because whatever I say,
okay, I'm just saying if Costco can't get exercycles and can't get equipment, the delay on Peloton, what does it mean? Remember, it took $100 million charge last time.
Yes.
And they've got this new, I don't know if Carl, have you tried their treadmill? I don't know.
No, I've heard good things, but I have not tried the tread.
Well, it's early. I mean, but
I doubt I'll get a chance to anytime soon either.
No, I mean, you got to put your name in. It's kind of like getting a Fisker, a Lucid, a treadmill. Name me two cars and something Peloton
Jim,
makes.
let's come back to the big picture here in terms of the 10-year, where the yield may go. People are actually starting to talk about 2%. What happens to these growth names if you continue to see the trajectory with prices obviously down, yield up on the 10-year?
Right now they're benign, right? They're benign today. But I read a piece that reminded me of when in the 90s, the supply that's going to hit the market next week. How's the market going to handle the supply?
You're talking about the bond market.
Yes.
Now, because, of course, if we get the $1.9 trillion, which looks likely, the Treasury is going to be selling bonds, a lot of bonds. We're going to be, it's deficit spending, as we know. And there is a question, like, where does the additional supply come from? Unless the Fed's just going to scoop it all up, which doesn't appear
buy it.
Well, but not clear that's the case.
No, it's not. But, David, I look at the supply problem. It is a problem.
So we're going to have some auctions that go off the rails?
Yes.
And what's that going to do to the market? Well,
rates are going to go a little higher. Mm-hmm. It still hasn't hurt the housing market, though. We got to point that out.
No, I mean,
it doesn't initially.
You look at a longer term of Carl, right, of the 30-year, and it's still pretty low, but even though it's moved up.
But absolutely. But
have you seen the numbers, Carl, that Phil LeBeau's got out on the price of autos? I mean, Phil obviously is just well ahead
on the
of
input.
everybody.
Yeah.
Not good.
Yeah, they're having to pay more for components, and that's going to feed right to us.
Yep, and we need, David scoffs at it, but we need a $50 billion 50-year bond to build. I actually talked with some of the larger CEOs and chips. They all know that we need a government. We need it like a Manhattan Project.
We're going to need a bigger bond.
All right.
One of my favorite movies. What can I tell you?
It is.
Yeah.
The best.
I always thought you were Quint.
Although, Jim, on the flip side, Goldman does take Fifth Third to conviction buy today, saying that the reaction to higher rates, especially at the short end, is going to be a lot quicker this time.
Well, look, these banks are flying. I mean, I saw just J.P. Morgan up 2 points even before the number. People have decided that this is the way to play it, and they decided that you got to play it with Exxon, and it doesn't matter. I mean, Fifth Third's a very good bank. I remember when I first heard it when I was at Goldman, and I called it Third Fifth, and the guy said, no, it's Fifth Third. I said, well, why would they put Fifth before Third? David, it's a quandary. It's a conundrum. It's a very good bank.
Yes, as we take a look at the overall, the bigger banks as well. But I did not see Fifth Third shares up over 53%. It's been a good place to be. Will that continue to be the case as we start to?
How about Key?
I don't know
You got a slight Key? Well, Key's only up 23. The one that is the best, I think, is First Horizon, because Brian Jordan has done a great job, up 27%, 3.6% yield, and you get the best areas of the country. You get Tennessee, which is booming. Yes. Why? Because, Carl, their taxes are somewhat better than ours. You get to keep a considerably more of your paycheck. Now, we're still working. When we look at our paycheck, it's like,
It's not a paycheck. It's soon, if politicians get with them, it'll be a stipend. That's what I call it. You'll be given a stipend. You'll be all right.
So you're a rich guy, and that's what you say? No, that's what people are going to say on Twitter. You know that as soon as you say that, you make.
I know.
I mean,
Once you get past 52, 53, 54% of your income, I don't know.
Well, I mean, is it better than taking 2% of what you own and just make it writing a check for what you own?
Shepard Smith here. Thanks for watching CNBC on YouTube.